Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Wednesday. It is September the 28th, which means we're literally just a couple of days away from the end of the third quarter. And man, what a quarter it has been. We've seen the stock market crash. We've seen energy prices pull back sharply. And many things are happening on a macro scale. There's lots of stuff going on in the world today. I don't want to turn this into a political discussion, so I'm just going to focus on stonks and spend a bit of time with you talking about some of the things that are happening. But first, to start with, we cannot ignore the sort of proverbial elephant in the room. Best wishes and our best regards, lots of love to people who are in the path of Hurricane Ian that is currently crossing over Florida, the peninsula of Florida, and as I said at the beginning, coming at you live from Palm Beach in Florida. The big blue dot is where I am, and the multicolored dot just to the left of where I am on the west coast of the peninsula is Hurricane Ian. It's not there right now. It's currently moving across the peninsula and whacking the people in central Florida, sort of in the Orlando area, but more about that in just a second. Our best wishes, our thoughts are with you. I know there's going to be a lot of damage. So whatever it is that we share in this video and the comments that we share afterwards, know that you're in our thoughts, and we care deeply about our neighbors and our friends and family, wherever they might be. So here's what I want to do. I want to talk a little bit about my investment portfolio and kind of tell you where I'm at. I've taken some, I've taken out some of the trash, effectively reduced some of the higher risk positions, which is in my, let's call it play portfolio or play money portfolio. And what I have focused on primarily, as I've said many times before, is energy and financial services, but I've kind of stripped away some of the things, including some of the uranium holdings that I had. I'm down to just a couple now, and I'll talk about that in just a second. But in this particular portfolio here, which is more of a global portfolio for me, as you know by now, I'm a US tax person. I'm a citizen in the United States, but I am also a dual citizen with Canada, and I also hold citizenship of the country of my birth. So from that point of view, I am pretty much an international citizen. This particular portfolio that I'm showing you here is actually my sort of global portfolio, and it's split approximately 50-50 energy and financial. And if you say this doesn't add up to 100, the reason for that is that in this portfolio, I hold a couple of ETFs, exchange traded funds, and that gives me exposure to some little bitty things that are listed here on the left side of the screen. From an energy point of view, the almost 50% holdings in this particular portfolio include Cameco, Enbridge, Pembina Pipelines, and XLE, which is the energy ETF. Now, I can tell you with almost total confidence, you can just, if you don't know what to buy, you can almost just buy XLE, the energy ETF, and I'll tell you more about that in a second. So in this particular energy portfolio, the splits between the four top energy holdings are uranium. Cameco is a uranium miner out of Saskatchewan in Canada. This one for me is up approximately 100% since I opened my position. Enbridge I've had for years and years and years. Pembina the same, not quite as long as Enbridge. And when I say I've held it for years and years and years, it doesn't mean that I sit long on it and just keep it forever. I do trade in and out of the position sometime, mainly for tax harvesting purposes. I'll talk a little bit about more about that in just a second also. But you can see the splits are sort of fairly even between my top three, XLE, Pembina, and Enbridge, and then Cameco makes up the balance. So Cameco is sort of still play money. It's higher risk than the other three. Enbridge, integrated energy, pipelines, utility that provides gas to people in Ontario, Canada for heating and cooling. Pembina Pipelines, XLE, an index. So let's take a quick look here at XLE. So I just made the comment saying if you don't know where to park your money, you can just buy XLE. Very frequently when I raise some cash in one of my accounts and I don't necessarily know exactly where to park it because I'm not ready to jump in or make a buy, or maybe the market is not reacting in a way that lends itself to me necessarily opening a new position for example, the stock just spiked, then I don't really want to buy it at that point in time. I prefer to buy it when it pulls back. Of course, time in the market is better than trying to time the market. But at the end of the day, if a stock goes up quite a lot, that's probably not a good time to get into it. You can wait until it pulls back a little. What is in XLE and why am I so confident when I say you can just buy it? Well, it contains in its top 10 holdings almost 44% Exxon and Chevron. That's the two top holdings. And then it drops off to around 4% for ConocoPhillips, Pioneer Natural Resources, EOG Resources, Schlumberger, Marathon Petroleum, Occidental Petroleum, Valero, and Devon. So you have here sort of the cream of the crop in terms of energy stocks. So if you cannot figure out or you cannot do your own due diligence to figure out what to buy, I can tell you with reasonable confidence, you can just buy XLE, especially right now. I'm an energy bull. You can buy XLE at the current price and just keep it. What is the current price? About $72, $73. As you can see, it was up about 4%, 4.5% today, earlier when I took the shot, which was about 3:30 Eastern time, so 30 minutes or so before the market closed. What's its net asset value? So NAV, net asset value, literally means the market value of an ETF, total assets minus liabilities divided by the number of shares outstanding. So its net asset value is $70. It's currently trading at $70, so it's pretty much there or thereabouts in terms of net asset value. So right now you're sort of buying it at cost if you buy it at around $70. It's an inexpensive ETF to own because the expense ratio is only 0.1%. Inexpensive, diversified energy, no-brainer. You can just buy this one. Let's take a slightly deeper dive here on XLE, and then I'll move on to another portfolio and show you what's in that one. It's got a Morningstar rating of 5. It's a big value fund, a large cap, low risk. The risk is below average, but the return is above average. If we look at the one-year chart, this is how it outperformed the two indices that I picked here, the Dow Jones and the S&P 500. The expense ratio, as I said, is only 0.1. It even pays a nice big fat dividend of $3.65, which at the current share price is yielding 5.25% or thereabouts. And you can see if you had to buy into XLE right now, you're actually buying it sort of in the middle of its 52-week range. So not a bad entry point in general for XLE. So once again, my point here or positioning is if you don't know where to put your money, you can pretty much buy XLE. I had an electrician who was doing a job for me the other day, and I said, what kind of lights should we install? And he said, LEDs. So I said, and why would that be? So his answer was, because you can just set it and forget it. They're never going to blow. They're going to last forever. You can just install them and don't worry about them. They're going to be there almost sort of forever. You can literally almost forever keep XLE in your portfolio. So let's take a look at my financials. So I did say that it's kind of 50-50 financials and energy. So this is the area where I've taken a hit. The financial stocks have not done nearly as well as what they did for me, for instance, the previous year and even the year before that. So in 2020, they just went up with the rest of the stocks after the pandemic had started. The old adage, a rising tide lifts all boats. So my financial stocks did very well. So as a result, I was in a huge gain situation that continued for most of 2021 and then pulled back in 2022. I have 3 major banks here and 1 ETF. And the reason why I included this ETF here is because the ETF Vanguard High Dividend Yield Fund also gives me a little bit of exposure into some financial stocks. But my 3 big holdings are the Bank of Nova Scotia. This is a Canadian bank with a huge footprint in Latin America. Sun Life Financial is an insurer, so it gives me a bit of a diversification in terms of my holdings. And TD Bank is not only TD as in Toronto Dominion or TD Ameritrade, but it is also a bank that is Canadian, but has a much larger footprint in the United States than what it has in its home country, Canada. So TD is diversified geographically because it has a huge US footprint and then, of course, a Canadian footprint at the same time. Scotiabank, on the other hand, is more diversified from a Canadian and Latin American point of view. In addition to that, all 3 of these stocks pay me a very, very healthy dividend. Currently, at the current prices, above 4, even up to 6%, depending on which stock you're looking at. So The richest dividend I earn is Bank of Nova Scotia. And the reason why it's almost at 6% or thereabout is because the stock is trading so very, very low. The other thing that you can note in this particular account here is that I hold approximately 14% cash. I usually hold about 10% cash when times are volatile and there's a lot of risk in the marketplace. I might increase my tax position, my cash position slightly and hold more cash. In some of the accounts, I actually have more than 14% cash, but usually I want to be sort of between 10 and 15 and not really have more cash than that. VYM, the one that I just included there, I said it gives me exposure to some additional large cap stocks. These include some pharma stocks like J&J and Pfizer. It also includes financial stocks like JP Morgan Chase, which is arguably one of the world's best banks, and then a variety of different equities that gives me a bit of diversification there. I have a large position in VYM as well, and the reason why I have a large position in VYM is much like my example of XLE. It's a stock that you can just own and hold and forget about. Initially, I parked money there because I didn't know where to put it, and it performed so well for me, I just kept it. Same as my example with XLE, you can look at the net asset value of VYM. It's approximately $96. You can currently buy VYM at around $98, which means you're buying it at close to its net asset value, which means it's relatively cheap. How cheap, Mr. Oxy? Well, this one has a Morningstar 4-star rating. Over the past year, you can see it's tanked along with the market, especially of late. The expense ratio on this one is super cheap. It's only 0.06. In other words, it's almost free. It also pays a nice dividend of 3.35% at the current stock price because the cash dividend is $3.22. Right at the bottom of the screen here, you can see on the left-hand side, the 52-week range on VYM is actually sitting way to the left. So it's near its all-time, not all-time, it's near its 52-week low of $95. It's currently trading at $98. So VYM, much like my example of XLE, if you don't know where to put money in this very, very volatile situation that we're in currently in the marketplace, park some money in VYM and XLE, and then when a bargain comes along like Occidental Petroleum that you can buy for like $10, then you can always move a little bit of money. Note, I said move a little bit of money. I didn't say take it all, but you can move a little bit of money out of gainers like VYM and XLE and speculate a little bit with that $10 Occidental stock, which it was for us 2 years ago back in 2020, around about the same time as the pandemic and leading up to it. How have these stocks done for me in the past year? So the financial stocks just sucked. This was terrible. So on this graph here on the left-hand side, the only good news for me is that the two bottom lines on the graph are actually the indices, the Dow Jones and the S&P 500 respectively. But my other three stocks, the two bank stocks or financial stocks, Sun Life Financial, which is the insurer, and Scotiabank, have pretty much just returned sort of in line with the Dow, which is horrible. But then TD actually came in positive, which means it outperformed the indices and the other banks quite significantly. TD, ironically, is my largest position in financial stocks and also the stock that I've held in my portfolio for the longest time. How about the energy stocks? Well, there's a completely different story. So you gain on the swings and gain on the roundabouts, whatever. That thing that we said sometime, the thing. Anyway, on the energy stocks, it's a completely different story. Of course, the Dow and the S&P 500 are down quite significantly year to date. I'm looking at this not year to date, but over 1 year. But then if I look at my energy stocks, they're all green. And a couple of really good performers, including XLE, up more than 35%, and Cameco, 39%. Now, if you've been following my channel, you would know that I've been telling you several times that I'm trying to achieve 15% per year compounded, because that way you can double your investment every 5 years. So that's kind of my target, 15%. And if I look at these holdings here, I'm kind of close to 15% plus. On most of these stocks, I'm reinvesting the dividend. And that I'm not even showing you here because this is just the stock price gain. So all the time as I receive dividends, I'm reinvesting that as well. When you look at this portfolio, this is a different portfolio. And this is the portfolio that shot me to this incredible fame on YouTube as a content creator, as Mr. Oxy. So in this particular portfolio here, which is actually one of my largest portfolio holdings, and this is a different account. This is actually a US account. It's not a global account or an account in different currencies. I have large caps, about 50%, and those two are just energy. The 50% is made up of almost 30% Occidental and just over 20% energy transfer. I have some mid caps. PALAF is palladium mining. It's a uranium miner out of Australia, and most of their mining properties and assets are in Namibia, in the western part on the southwest coast of Southern Africa. I have about 16% in ICANN, and as you would have noticed if you've been following my videos, on a previous video I mentioned I just keep buying ICANN. One of the reasons why I buy ICANN is because it's one of my foundational stocks. It's a volatile situation right now in the marketplace, and ICANN pays me a very hefty dividend of almost 16%. And then I hold AllianceBernstein as well, which is a financial services company. It's also been a horrible dog for me. But it also pays a dividend of over 10%, so it's actually been performing quite well with the reinvested dividends. Right here at the bottom of this account, you can also see that I hold 14% cash. So much like the account I just showed you, which is a global account, this particular account has also crept up to about 14% cash. So I've increased my cash position, I've increased my foundational holdings, and stripped away some of the smaller cap stocks, higher risk stocks. As I mentioned at the start of the video, I've taken out some of the trash, right? So they're not necessarily bad companies, but in a volatile market, I don't want to be in a risk position where you see some stocks moving 15, 20% in one day, especially when it's going down, right? I don't need that kind of a loss, because the fact of the matter is this: if you have a $100 stock that drops 50%, so now the $100 stock is trading at $50. When it's trading at $50, it needs to go up 100% for you just to break even again. And 100% gain in the market is not easily achieved. So when it gets down to 50%, you might feel happy when it goes up 5, 10, 20% in one day. It's just not enough. You're in a deep, big hole. And it's very difficult to climb out of a hole that you've dug for yourself when you're holding a stock and you're down like, 60%, 70%, 80%. Sometimes all you can do is just cash out, take the money and find something better to invest in instead of that particular stock. What else is in this portfolio? Well, I said the large caps. Oxy, this is a different account. This is an additional account. So I just showed you Oxy in the previous account. This account also has a large cap. This is a new account, in other words. I've now showed you 3 or 4 accounts. This one has a 15% holding in Occidental Petroleum. It also has international equity. So this is more of a play account. Most of my accounts that I do not play with, my foundational accounts or foundational stocks, are mostly US equities. So in this one, I have a little bit of play money at work here. One of them is Lukoil, the Russian major oil company. Currently, if you could buy the stock, and you cannot because of sanctions, you can currently pick up some Lukoil stock for about $6.96, which is ridiculously cheap. If sanctions are lifted, maybe somewhere along the line, hopefully we achieve some kind of a peace initiative or something, and that Russian-Ukrainian thing starts dissipating or subsiding, Lukoil should be trading back at $100 or more than $100 per share, where it was and where arguably should be based on its production and its fundamentals. The other stock I have here is PBR, which is Petrobras. Now, I have made a couple of videos on Petrobras and told you why I am buying Petrobras. It's still high risk. The Brazilian elections are coming up really, really soon, which is a 2-horse race between the extreme far-right candidate, Bolsonaro, who's also the current president, and the extreme far-left fascist left-wing candidate, Lula, who is the front-runner to replace Bolsonaro. I have no idea what's going to happen in that particular election. It's for the Brazilian people to decide. But what I do know is that Petrobras is arguably the cheapest super major that you can buy when it comes to energy stocks right now. And it pays a monstrous dividend. I'm not sure what's going to happen to that dividend, but the madness cannot continue as it currently continues. And guess what? I had some cash. I didn't know where to park. So on this particular account, I also have a holding of XLE, 25% of the account. So in fact, when you look at the value of the positions in this particular account, I actually have more XLE than any of the others. And in addition to that, because of the volatility and the risk in the market, the cash position on this particular account is 27%, but that's because I have sold some stocks. Some of the stocks I sold at a loss. Now, year to date, I have some very large gains on some stocks, like probably you have as well, like on Occidental. So what you can do is you can afford to take a loss on some of your smaller holdings and just offset that by the gain that you make on Occidental Petroleum, which means you don't have to pay tax on that gain because you're offsetting against a loss situation against that gain. When you don't have to pay tax on your gain because you're selling other stocks at a loss, that's called tax harvesting. And what you can do is you can trade yourself into a position where you actually do not end up with a tax obligation. It's sort of a wash. If you sold Occidental and made $100 worth of profit, and then you sold your REIT and you made $100 loss, it's a wash. So you don't have to pay any tax, but now you have extra cash. That's one of the reasons why this particular account has 27% cash. And remember, cash is always cash awaiting investment. If I had to show you this account again within the next few weeks, you might find that the cash position has dropped down to 10 or 15%. And maybe the most obvious add-on for me right now would be XLE. Easy decision. When I look at this particular account and I look at my consolidated holdings in the two accounts that I just showed you, you can say what exactly is in it and why. So of course, I lead with energy because I'm bullish energy, and energy has been my best performing sector for at least a year, actually almost 2 years. And the financials absolutely suck, but sooner or later they got to bounce back. And the thing with financials is it includes a lot of banks, and banks have the ability to generate products out of thin air. I mean, if anyone can sell you stuff that didn't exist yesterday, it's a bank. They'll just dream up a product. That's how you get things like asset-backed commercial paper and derivatives or whatever. They take a whole lot of stuff. Sometimes it's toxic assets, and they bundle them up and sell them to people. And there's always a buyer. It's the strangest thing. But when banks are super cheap, vultures like me hang around and start seeing if we can pick up some of the scraps. So I've actually been buying, in addition to adding to my positions on Energy Transfer and on ICANN and on AllianceBernstein, I've even added to my position on Scotia Bank, so BNS, Bank of Nova Scotia, the Canadian bank. I just bought some just yesterday of Bank of Nova Scotia. So I've actually been adding to my positions while the market has been crashing. What does this wagon wheel look like, or pie chart look like? So you can see there's a sort of relatively even weighting here between these four stocks, which are Occidental, Energy Transfer, AllianceBernstein, and ICANN Enterprises. These guys over here, ICANN Enterprises and AllianceBernstein are my foundational stocks. Energy Transfer is a stock I got into relatively recently, so in the last 2 years, mainly because of Bulldogs number one, who introduced Energy Transfer to me. And since then, I've just been building my position, and I now have a huge position in Energy Transfer. It's actually my third largest position after Occidental and XLE. Oxy, of course, is a mainstay for me. That's why you guys call me Mr. Oxy, right? And then you can see some of the play money sitting over here. And what you have in this particular account in Consolidated Holdings is only 9% XLE. But don't forget, in my other account that I started off this video with, there's a massive position in XLE, so you got to add those two together. So XLE actually belongs in the same kind of category as Occidental Petroleum in terms of value for me in my holdings in my account. The 1% here is Lukoil, the Russian super major that I referred to briefly. Petrobras is 8% of my portfolio, and that one is obviously a sort of emerging market type stock. And then the 3% here is uranium. So I have two uranium stocks here. This is a uranium miner from Australia, Paladin, with its assets in Africa. And the other one is Cameco, which is a Canadian uranium miner with most of its assets in Saskatchewan. So guys, that's a wrap on this video. I just want to show you currently where the hurricane is. It's kind of tracking here across the center of Florida, across central Florida. Now, keep in mind that this is a very heavily populated area. So from just a pure geography point of view, whatever you think of Florida and Florida man and all the funny things that come out of Florida, but just purely from a geography point of view, Florida has a population of around 22, 23 million people, which is just shy of 10% of the United States population. So it's a large state. It's a populous state. There are a lot of assets in the state. There are a lot of large industries, things like Disney in Florida, cruise lines. So there's a lot of business. There's a lot of tourism. There's a lot of money coming in. There are a lot of people that are fleeing the northern states for uh, political reasons because of cold weather, and they're getting older, kind of like me, to places like Texas and Florida. So there's a lot of money coming in. In fact, on the last Chamber of Commerce note, they said that the cash inflow was approximately $2.4 million per hour coming into Florida. So it's a big money state. There's a lot of business here. There's a lot of people here. So join me in kind of wishing the Floridians, my fellow Floridians and neighbors and friends and people you've probably never met before. But hey, you know what? Just spare a little thought for them and wish them well during this hurricane. And hopefully it passes through without doing too much damage to people and property. On that note, this is Mr. Roxy saying thanks for watching. I'll talk to you soon. Bye-bye.